Hey, hope you're having a great day so far, and welcome back. Today's February 16th, Tuesday, and on this post I'll be telling you about the overall crypto markets very quickly, which includes Bitcoin dominance and Bitcoin price action, and see how it could potentially affect the altcoin markets in the short-term future, before diving into NuCypher, NUUSD, and see what exactly is going on in this market since the last time I have spoken. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys do want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks as of today upon a successful sign up and a qualifying deposit of $100 and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor, and this is not financial advice. I'm purely sharing my own speculation opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Now, see what exactly is going on in this market. First, most importantly, I do take a look into Bitcoin dominance. It tells me where the money could be trending into. Would it be Bitcoin, altcoins, or neither? Currently, we do have Bitcoin dominance up over 1%. This breaks down to Bitcoin price action up about 1.6%. I have brought up a possible miscalculation issue within the TradingView software because it does not seem to add up here. That total altcoin market cap is actually down about 1.4%. So that's something, just a side note, as I have already mentioned in my previous video. So something I'll be looking to for it to actually get corrected, possibly. Okay, now let's take a look into Bitcoin dominance here on the daily time frame. It's still my focus because I am looking for the daily candles here to continue making a lower low without bullish divergence, as we did have right here with this low, a lower low comparing with the last low, however with bullish divergence, which signaled this bounce right here. And whenever Bitcoin dominance actually trends upwards, not as ideal for the altcoins, okay? So I'm looking for Bitcoin dominance to actually continue trending downwards. Generally speaking, better for the altcoins on both the upside and downside. Okay, so let's see if this downtrend will actually continue. Bitcoin price action here, still running within these two trend lines I had initially estimated, okay? Price action got to about 50K before getting rejected. Let's see if the price action will continue here. If Bitcoin actually pulls back from here to somewhere close to the bottom trend line, or even more, this could still have an effect on the altcoins. The magnitude of the effect would depend on how far up or down Bitcoin dominance is trending. Let's take a look into NuCypher, NUUSD, and see what exactly has gone on in this market. So let's go back to the 4-hour time frame. I believe that was the time frame I was focusing on from my last post. Okay, you guys can check it out for yourself again. But I had mentioned that there was a possible cup and handle pattern, okay, with the very skewed right side of the cup pattern, with the bigger rounded bottom, which is the cup, okay, and the smaller handle pattern right here, okay. Measure target was about 88 cents. Price action got up to about 89 cents, so I will consider that to have fully met the measured target, okay, before getting rejected and continuing and actually pulling back here quite a bit, okay. Now I have refreshed the Fibonacci retracement levels to about 85 cents for the new top, okay, because of I was looking at the daily time frame, and I think 85 cents would be a good psychological support without a small outlier, but I just want to include up to the 85 cent level to be even number, and pretty much corresponds with most of the price action here. Now, let's take a look into the higher time frames here, as I routinely do. Let's look for any overbought RSIs or possible bearish divergence scenarios from the monthly time frame down to the daily. These are the macro time frames I consider. On the monthly time frame, we don't have an RSI reading, so let's go down to the weekly, where we still don't. So let's go down to the 3-day, where we are where we had a pullback since we got to an RSI reading of about 78, okay, slightly under 78. We're currently at about 68 right now, so possible bearish divergence scenario here, okay. 3-day candle actually closes in a little over a day. Okay, let's see if this is going to end up to be a red candle. If it ends up to be a red candle, the next high, the price action makes on the 3-day time frame, if it makes a higher high, then I'll be comparing that new high with this past high right here at about 74 cents and its last RSI reading of about 78, just to be safe here. Okay, 78 RSI reading for the last high. That's the last high. That's the high I'll be comparing the next newer high to. Okay, if the newer high does not beat the RSI reading of about 78, then there is possible bearish divergence scenario, and I will look out for that because more often than not, it could still signal a pullback. Daily time frame, we already had bearish divergence comparing this high right here with this high. However, with equal highs on the RSI, that is classic bearish divergence, and we are seeing that pullback right now. Now, whenever I do see bearish divergence on a specific time frame, my conservative estimate is that it's going to come down to the next closest moving average on that specific time frame. In this case, would be the 21 MA on the daily time frame, about 46 cents right now. Okay, now would the price action actually come all the way back down to about 46 cents, or are the bulls strong enough to hold this price action up? Okay, in terms of a bearish case, bearish divergence scenario, my 3 scenarios here is if the bulls are strong enough, it could hold up the price action and take off without it again. It could hold the price action up just enough for the moving average to come up closer to the price action so it does not have to drop so significantly down, okay? Or the last scenario would be if the bulls just flop and the price action drops significantly down to the daily 21 MA in this case. Now, these are the 3 scenarios I'll keep in mind and see which one actually plays out and look for hints of which one would actually be likelier to play out. Okay, let's go down to a 12-hour time frame where I can actually see an example here of what I just said playing out. Okay, we had bearish divergence comparing this high with this high. However, lower highs on the RSI, that is still classic bearish divergence comparing to what I just said about the daily time frame just right now. Price action dropped all the way back down to the 12-hour 21 MA, which is the blue line right here. Let's see if this will actually hold up. Now, what I'm looking at here will be the 4-hour time frame where I do think this is forming somewhat of a falling wedge pattern, even though with some sporadic movements up and down. Okay. However, no candles have closed above or below these trend lines. So if I do see a candle close above or below these trend lines, it could be a break either way out of the pattern. Now, this is what I'm estimating, a falling wedge pattern here, okay? Even though with some sporadic movements on both the upside and downside. You guys let me know what you think or if you agree or disagree. Now, if I am actually right about this, then I have a measure target, which is taken by measuring the opening of the pattern and then adding it back to the expected breakout points. Okay, in this case would be, I would take into consideration of the 65 cents breakout point because that was also the neckline of that initial cup and handle pattern right here that had broken out. Measure targets is going to be about 82.4 cents here if it actually does break out of this pattern by February 17th, 20 o'clock UTC. Some things to be paying attention to is that the 4-hour 21 MA is also above this pattern. So even if it looks like the price action has broken above this pattern, I'll look out for any lingering short-term moving averages above the pattern that could be acting as resistance. Okay. Now, measure target. The measure target here is by 82.4 cents. It's a theoretical approximate target only. May actually be different in real-life price action, more or less. And falling wedge patterns are generally bullish patterns. 68% chance of it breaking upwards, according to Thomas Bukowski and his website, thepatternSite.com. You can verify that source on your own or with another source. Now let's take a look into the bullish and bearish case scenarios here. Bullish case scenario, price action breaks above this falling wedge pattern. I'll keep in mind, I would not lose track of any possible short-term moving averages that could be acting as resistance above the pattern. In this case, I already do see the 4-hour 21 MA. Okay, so I'll look out for that as resistance, even if it looks like price action has broken out of this pattern. Bullish case scenario, break out of this pattern, and any lingering above resistances above the pattern and go towards its measured targets. Bearish case scenario, price action gets a candle close on the 4-hour below this bottom trend line. This tells me that this falling wedge pattern is not going to stay intact. Okay, I'll even be cautious if I see a candle wick below this bottom trend line. Okay, let alone a candle close. Bearish case scenario, get candle wicks below this bottom trend line. The next level of support I'll be looking at could possibly be the 6-hour 50, which is pretty parallel with this bottom trend line right now, so it doesn't look like I need to invalidate this falling wedge pattern, even if it looks like price action has broken below this bottom trend line here. Let's take a look into the 12 hours also there. Okay, so if the price action breaks below this bottom trend line and it looks like the next level of key support I need to look at will be about the 56 cents fib level. Okay, now that is the bearish case scenario. If price action breaks this bottom trend line, I think there is still some short-term moving averages I had just mentioned that could still keep this falling wedge form intact to be a bullish pattern. However, if these supports are broken and this falling wedge pattern shape breaks, the next level of key support I'll be looking at will be the fib level as of right now, as of this snapshot, at about 56 cents. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know agreements, disagreements, feedback. I would love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.